Welcome to Sawyer Silver Vault. We are waking up to absolute chaos in the crypto markets. Just when you thought the dust was settling, Bitcoin just delivered a violent downside move that has traders scrambling and long positions getting absolutely obliterated. In the last 24 hours alone, over $160 million in leveraged longs have been liquidated, and the king crypto itself, Bitcoin, smashed straight through multiple key psychological levels, like a wrecking ball through drywall. We're not talking about a small pullback. We're talking about Bitcoin breaking below the $58,000 handle, and then, in a move that caught nearly every analyst off guard, plunging to test support near $56,800 before a weak bounce. The reason this move is so concerning isn't just the price drop, it's the way it happened. Low volume during the Asia session, then a cascade of sell orders hit the books as soon as European liquidity opened up. No single catastrophic news headline, no exchange hack, no dramatic regulatory ban. What we're seeing instead is something far more subtle, but arguably more dangerous for the short term outlook: a slow bleed in institutional confidence, combined with relentless ETF outflows that have now stretched into their sixth consecutive trading day. If you're holding Bitcoin right now, or if you've been waiting on the sidelines for a clear signal, you need to watch this entire breakdown, because what happens over the next 48 hours could determine the trend for the rest of the quarter. Stay with me. Let's start with the price action, because that tells the real story. Bitcoin is currently trading at $57,400, down nearly 7% on the week, and over 12% from the local top just above $64,000. That break below 58,000 was the trigger. Anyone who's traded Bitcoin for more than a cycle knows that 58,000 acted as a major support zone going back to early August. We tested it 4 separate times over the last 3 weeks, and each time buyers stepped in aggressively. This time, they didn't. Instead, what we saw was a clean breakdown, a retest of that level from below, which failed immediately, and then acceleration to the downside. From a technical analysis perspective, that is textbook distribution. The market gave trapped bulls one last chance to get out, and when they didn't, the sellers unloaded. The next major support now sits at $54,500, which is the August swing low. But here's what has traders genuinely nervous. The RSI on the 4-hour chart has dipped into oversold territory multiple times without any sign of bullish divergence. That tells us momentum is still firmly to the downside, and any relief rally is likely to get sold into. Now let's talk about the elephant in the room, the ETF flows. The US spot Bitcoin ETFs just recorded their worst week since late April. According to the latest data from Bloomberg Intelligence and Farsight Investors, net outflows on Thursday alone totaled $374 million. That brings the weekly total to over $900 million in outflows. The biggest culprit? The Grayscale Bitcoin Trust, which continues to bleed assets, with another $130 million leaving the fund in a single day. But it's not just Grayscale. The IBIT ETF from BlackRock, which had been a rock of stability, posted zero inflows for the second day in a row. And the Fidelity Wise Origin Bitcoin Fund saw its largest outflow in over a month. When the biggest institutional products are seeing money walk out the door, retail traders notice. And right now, sentiment has shifted dramatically. The Crypto Fear and Greed Index has plunged from greed at 64 all the way down to fear at 32 in just 1 week. That's a psychological gut punch. But here's the part that most mainstream headlines are missing. The outflows aren't happening because institutions suddenly hate Bitcoin. The outflows are happening because of broader macroeconomic pressure and a specific liquidity squeeze in the treasury market. Yields on 10-year treasuries just spiked to 4.6%, their highest level since May, after stronger than expected jobless claims data suggested the Fed may not cut rates as aggressively as previously hoped. And when bond yields rise, risk assets get repriced. Hedge funds that were running basis trades, long Bitcoin ETFs, short CME futures, are being forced to unwind those positions as margin requirements increase across the board. That forced unwinding is precisely what created the cascade we saw yesterday. This isn't a fundamental rejection of Bitcoin as an asset class, it's a mechanical deleveraging event. And mechanical deleveraging events, while painful in the moment, often create the best long term buying opportunities. Let's look at what the whales are doing, because that's where the real signal is. On chain data from Glassnode and CryptoQuant shows that wallet addresses holding between 1,000 and 10,000 Bitcoin have actually increased their holdings by over 12,000 Bitcoin in the last 72 hours. That's right. While retail panic sells and ETF outflows dominate the headlines, the largest non exchange wallets are quietly accumulating. Meanwhile, exchange reserves just hit a 6-month low, meaning fewer coins are available to sell. That's a massive divergence. Price is dropping, but available supply on exchanges is shrinking. Historically, that setup has preceded violent reversals. It doesn't mean we bottom today, but it does mean the fuel for further downside is limited, unless a truly catastrophic event occurs. Now, the headlines you need to be watching. Breaking just an hour ago, the U.S. Department of Justice moved $41 million in seized Bitcoin connected to the Silk Road case to a new wallet. That alone isn't market moving. It's a tiny amount relative to daily volume, but traders are on edge because the DOJ still holds over 200,000 Bitcoin, and any hint of an imminent sale could trigger another sentiment shock. Separately, MicroStrategy has not announced any new purchases in the last 10 days, breaking their recent pattern of weekly accumulation. Some analysts are reading this as Michael Saylor waiting for a better price. Others worry the company may be facing debt covenant pressures after the recent drop in its stock price, which is down 18% from its highs. Also, keep an eye on the regulatory front. The SEC has delayed its decision on the options listing for spot Ethereum ETFs until mid November, which has added to the overall risk off mood across crypto. From a technical perspective, here are the exact levels every professional trader is watching right now. On the downside, $56,000 is the immediate support, but the real battle is at $54,500. If that breaks, the next stop is the $52,000 region, which represents the 200-day moving average on the weekly chart, and the neckline of a massive head and shoulders pattern that would project all the way down to 42,000 if confirmed. On the upside, Bitcoin needs to reclaim $58,000 with force to invalidate the breakdown. Above that, the first real resistance sits at 59,200, then 60,500. A close above 62,000 on the weekly would flip the entire structure back to bullish. Until then, every rally is suspect. What are traders watching next? First, the U.S. non-farm payroll report due out tomorrow morning at 8:30 Eastern. A weaker number could revive rate cut expectations and send Bitcoin ripping higher. A stronger number will pour more gasoline on the bond yield fire and likely send Bitcoin down to test 54,500 before the weekend. Second, the open interest in Bitcoin futures just dropped by over $2 billion in 24 hours, which actually reduces the risk of another immediate long squeeze. That's a silver lining. Third, the stablecoin supply on exchanges just hit an all-time high of $42 billion. That means there's enormous dry powder waiting on the sidelines. The question isn't whether money will come back into Bitcoin. The question is what price level triggers the buying. Let me give you the bottom line. This pullback feels scary because it came fast and broke key levels. But zoom out. We are still up over 35% year to date. We are still trading well above the pre ETF approval levels. And the institutional narrative hasn't died. It's just taking a breather while macro conditions settle. The next 7 days are critical. If Bitcoin holds 54,500 and then reclaims 58,000 within the next 2 weeks, this entire move will be remembered as a textbook shakeout before the next leg up. If it doesn't, we could see a longer consolidation into the mid 40s. Either way, you need a plan. You need levels, and you need to stay informed. That's exactly what we do here every single day at Sawyer Silver Vault. We cut through the noise, give you the data the institutions are watching, and help you stay ahead of the move. We're tracking these ETF flows, whale wallets, and technical levels by the minute. If you want to catch the next reversal before the mainstream media even knows it's happening, you're in the right place. Lock in, stay sharp, and remember, in crypto, the best opportunities are born from the deepest fear. For more amazing videos like this, subscribe to our channel, Sawyer Silver Vault News.